For years, it was an undeniable truth: fine whiskey was an appreciating asset. A safe haven. A liquid gold that only gained value, bottle by precious bottle. But now? Something has fundamentally shifted. A seismic tremor beneath the very foundations of the spirits market. We stand at the precipice of a revelation that many refuse to acknowledge, a silent undoing of fortunes once thought secure. By 2026, an unthinkable reality has set in for certain prized collections. Some whiskies, once fetching astronomical sums, are now without value. A chilling thought, isn't it? But the evidence is undeniable. Consider the trajectory. From 2010 to 2023, the rare whiskey index soared. Unprecedented growth. But then, the whispers began. Small corrections, dismissed as market adjustments. Now, those whispers have become a roar. Data indicates a stark reversal. A precipitous decline that has caught many off guard. What forces could possibly orchestrate such a dramatic fall? Was it a bubble, inflated by unchecked enthusiasm and speculation, finally bursting under its own weight? Or something far more insidious, a convergence of factors that few saw coming? The preceding decade was defined by a fervor for rare spirits. Collectors, connoisseurs, and, crucially, investors, flocked to auction houses and exclusive releases. Bottles once bought for enjoyment became commodities, their value detached from their liquid content. This era saw records shattered, with single bottles fetching sums previously reserved for fine art. Limited editions, distillery-only releases, and age statements became battlegrounds for wealth. It was a gold rush, pure and simple. But, like all gold rushes, the promise of infinite riches often obscures the inevitable crash. The question was never if, but when. What drove this rapid ascent? A simple distinction: collectors versus speculators. Collectors seek rarity, history, and the pleasure of ownership, driven by passion. Speculators, however, see only numbers. They bought not to drink, but to flip. To hold, then divest at a higher price. This influx of purely transactional interest created an artificial demand, a fragile ecosystem built on the assumption of endless appreciation. When the music stopped, it was these speculative holdings, vast in number, that had no true buyer. Their value was merely a reflection in a distorting mirror. The distilleries themselves, observing the booming market, responded. Increased production. New expressions. Younger whiskies rushed to market with elaborate stories and limited edition tags, hoping to capture a piece of the fervor. This strategy, while profitable in the short term, flooded the market. Supply outstripped genuine, sustained demand. The illusion of scarcity began to crack. Suddenly, those limited releases weren't so limited. This mass influx diluted the perceived rarity of all whiskies, dragging down the value of even established names caught in the undertow. As prices climbed, so did the allure for nefarious actors. The rise of sophisticated counterfeiting became a silent, corrosive force. High-value bottles were refilled with cheaper spirits, labels meticulously faked, and provenance fabricated. The sheer volume of these fakes, now circulating in the secondary market, eroded trust. Buyers became wary. How could one be sure? The risk became too high. For many, the gamble was no longer worth it, especially for bottles without impeccable, verifiable chains of custody. This pervasive doubt alone could render a collection worthless. Taste, like fashion, evolves. A new generation of consumers entered the market, less tethered to the traditional, heavy, aged profiles that dominated the investment-grade category. Preferences shifted towards lighter, more innovative spirits. Craft gin, unique rum expressions, and even non-alcoholic alternatives began to capture market share and mind share. This evolving palette meant that many of the revered, traditional whiskies, particularly those relying on decades of age for their appeal, simply lost their cultural relevance. The next generation wasn't chasing their parents' prized bottles. The internet, once a boon for connecting buyers and sellers, became a double-edged sword. While it facilitated global trade, it also amplified the issues of counterfeiting and misrepresentation. The sheer volume of online listings, many unverifiable, made it impossible for average buyers to discern genuine articles from expertly crafted fakes. Forums and social media became rife with stories of fraudulent purchases, further poisoning the well. Confidence in online secondary markets plummeted. When authenticity can't be guaranteed, even a real bottle struggles to find a buyer, especially at its perceived value. Governments, keen to curb illicit trade and protect consumers, began to intervene. New regulations regarding provenance, labeling standards, and even taxation on secondary market sales emerged. These measures, while well-intentioned, added layers of complexity and cost. Importing and exporting rare bottles became a bureaucratic nightmare. Some regulations, particularly those concerning investment products, inadvertently classified rare spirits in ways that made their trade less appealing. Compliance costs soared, making it simply unprofitable to deal in many high-end, low-volume whiskies. The market became a minefield of red tape. Beyond market forces and human actions, nature itself played a role. Climate change began to impact traditional whiskey-producing regions. Erratic weather patterns, droughts, and changes in water quality threatened barley harvests and distillation processes. This led to fluctuating quality, supply chain disruptions, and increased production costs. The romantic image of pristine Scottish glens or Kentucky distilleries began to show cracks. When the foundational ingredients become unstable, the integrity of the product itself comes into question. Sustainability became paramount, and brands without clear environmental strategies faced consumer backlash. While traditional, aged whiskies faltered, a new wave of distilleries emerged. Craft, independent, and often highly innovative, these producers focused on unique grains, experimental aging techniques, and sustainable practices. They offered transparency, traceability, and a narrative that resonated with the modern consumer. Their products, while not commanding the same age statements, provided fresh, exciting alternatives. This diversification of the market meant less focus, and therefore less demand, for the old guard's offerings. The prestige once solely attached to legacy brands began to dissipate. A global economic downturn in the mid-2020s proved to be the final straw for many. Luxury goods markets are always the first to feel the pinch during recessions. Disposable income dwindled, consumer confidence plummeted, and the appetite for high-priced, non-essential items vanished. Investors, facing losses elsewhere, liquidated their whiskey holdings, further depressing prices. The safe haven narrative shattered. When people are tightening their belts, a $10,000 bottle of whiskey is no longer a priority, nor an investment. It simply becomes an unaffordable luxury. Not all brands were created equal, and not all weathered the storm. Some legacy producers, slow to adapt, found their once unassailable reputations eroding. Others, having built their entire marketing strategy on artificial scarcity and celebrity endorsements, saw their house of cards collapse when the hype evaporated. The market began distinguishing between brands with genuine heritage and quality versus those built purely on marketing spin. Authenticity became a precious commodity. And for many, the emperor had no clothes, their premium was unsustainable without genuine demand. Owning a valuable whiskey collection comes with responsibilities, secure storage, specialized insurance, and careful inventory management. These costs, once absorbed by appreciating assets, became significant liabilities. With prices stagnating or declining, the annual cost of holding a collection began to outweigh any perceived future gains. For many, especially those with large, diversified portfolios, simply breaking even became a challenge. The cost of worthless bottles wasn't just their lost purchase price, but the ongoing expense of their continued, now unprofitable, existence. All these factors, independently potent, converged in 2026. This year marked a critical threshold. The market simply could not sustain the artificial valuations. It wasn't a sudden, single event, but a slow-motion unraveling. A cascade effect where each falling domino accelerated the next. Dealers found themselves with unsaleable inventory. Collectors watched portfolios hemorrhage value. The notion of worthless wasn't literal for every bottle, but for many, particularly those without a genuine drinking market, the effective value, the ability to sell at any reasonable price, evaporated. A brutal lesson for an overheated market. So, which whiskies faced this dire fate? The 15 categories, if we must define them, are not arbitrary. They share common traits. Bottles bought purely for speculation, without regard for intrinsic quality or genuine rarity. Limited editions that weren't truly limited. Age statements that masked average liquid. Bottles from distilleries that prioritized hype over heritage. Those lacking verifiable provenance, falling prey to counterfeits. Whiskies that failed to adapt to new consumer tastes. In short, the most vulnerable were those built on fleeting trends, not enduring substance. The mirage, not the oasis. But not all is lost. True value, it turns out, was always in the liquid itself. Whiskies purchased for the joy of tasting, for sharing, for the craftsmanship they represent, these retain their inherent worth. The market correction didn't destroy whiskey, it merely purged the artificial inflation. It stripped away the illusion, leaving behind the enduring beauty of a well-made spirit. For the genuine enthusiast, the landscape has simply returned to what it should have been all along. A focus on quality, provenance, and the rich experience, rather than a speculative gamble. The story of these 15 whiskies, now virtually worthless in 2026, serves as a stark reminder. A cautionary tale for any market driven by unchecked speculation. The forces at play were complex, a collision of overproduction, sophisticated fraud, shifting global tastes, economic turbulence, and a failure to adapt to a changing climate. It wasn't one single factor, but a perfect storm that redefined value. What remains? A market purified, perhaps. A return to the true essence of whiskey. But for those who bought into the hype, chasing a phantom fortune, the lesson was brutal. A silent, sobering reckoning, etched into every devalued drop.